What's going on YouTube? It's your boy D.Ford here, and I am back with another financial talk video. How's everyone been? Hope everyone's well. Sorry I've not been posting videos like I want to. Got kind of sick a little bit, but we're good. We're back. So today's topic, we're going to piggyback on the last topic we had talked about. Last financial talk, we had talked about credit. Today we're going to talk about how to pay credit cards off. Obviously, I think that's the number one issue, or at least finance issue, that most people have is credit card debt. They're very easy to, to get in trouble with. Some ways that you get in trouble with credit card is you put a major purchase on that credit card and you just make the minimal payments to pay it off. So for an example, let's say you have a $15,000 credit card with a credit card limit. You put $10,000 on that credit card. Your minimal payment's only $50 a month. It's going to take you forever to pay that down because you got to think about the interest that that accumulates on that credit card there. So I see, because obviously you guys know I work in the finance industry, I see that being the number one issue where people try to learn from their mistakes and they tell their friends, their family, and definitely parents, tell their kids, never get a credit card. If you can just afford it, just buy it. And so when I talk to my college age clients and I say, have you looked at building credit? And they're just like, I don't want to do a credit card. The best practice to use a credit card is use it, and whatever you use it for, you just pay it off at the end of the month. That way, you don't have to worry about credit card debt, and you don't have to worry about paying any interest, because as long as you pay before that statement cycle is over, you take care of all the interest. Now, you can also use it for emergency purposes, but you have to understand, since you are using it for emergency purpose, that interest rate is going to come with it. Obviously, emergency purpose means that you're probably going to take some time to pay it back. So you might take 3 months, 6 months, a year, 2 years, 3 years, whatever, to pay that back. So however long it takes, you got to understand and add the interest rates on top of that. And again, that's where people get in trouble, because what they do, they only pay the minimal balance. Then you have people that say, you know what, my goal is to go ahead and pay this credit card off. I'm going to put extra money on top of it. So my minimum payment's only $50. I'm going to put $100. So I'm going to put an extra $50. I'm going to knock out some of that principal on that credit card. Wrong. Reason being is, with credit cards, they're unlike loans. Credit cards are revolving credit. So with a loan, there's an end date. You pay it off and you pay it down. Once it's over, it's over. With the credit card, you pay it off, you pay it down, you can reuse it again. So with that additional principal payment that you would have with the loan, like an auto loan for like your car, so let's say your auto loan payment's only $400, you put an extra $100, you pay $500. So out of that first $400 from that $500, whatever your interest rate is, let's say it's 4%, 4% of that is going to go towards interest, the rest goes towards the principal. Well, that extra $100 that you put down on that auto loan also goes towards principal. No interest is taken away from that. But with the credit card, that doesn't go. So with the credit card, if your regular minimum payment is $50 and you decide to put an extra $50, so $100, well, whatever your interest rate is, let's say 20%, well, 20% of that $100 is going to go towards interest. And that includes that additional $50 that you have put down. So, yes, you can pay your credit card down that way, but you have to understand, it's still going to take away interest from any additional payment that you put down on that credit card. So if you have multiple credit card debt, let's say you have a combined of $20,000 of credit, $20,000 worth of credit card debt, what you can do is you can take out what's called a consolidation loan, a personal, unsecured personal loan, consolidation loan, which is interest rate is 9 times out of 10 going to be a lot lower than what your credit card interest rate is. And if you have multiple credit cards, you can put down, let's say you have 4 credit cards equaling $25,000. So now you're paying 4 different payments. You're paying 4 different interest rates. You can get one unsecured personal loan. Let's say your unsecured personal loan interest rate is 6% versus the average of the your 4 credit cards being, let's call it 20%. You're going to save yourself a lot of money. Now, let's say between those 4 credit cards, you're paying a total of $400 a month. Well, if we can get you into a $25,000 unsecured personal loan where you know you're going to have the end date. You're going to have an end date with the credit cards, but you're going to have an end date a lot sooner with that personal loan, because you can take one out and have it paid off in 5 years, 4 years, however long, you know, you need to do it. And save yourself some money. Save yourself some money on the interest, because let's say your payment for, you're putting $400 towards your credit card, and let's say your payment for this loan is only $300. Well, you can definitely knock out a lot of that principal with putting down some additional principal payments there. And obviously banks and credit companies, they love the fact that you have credit card debt. And what do? They send you offers for more credit cards, and they want to offer 0% interest rate for 6 months, 12 months, 18 months, whatever. Now your question might be, well, is that a bad thing? No, it's not a bad thing, because you can actually really put a dent in any kind of debt by doing that. Getting a brand new credit card, as long as you know you're credit worthy, and let's say they give you a nice little chunk of a credit limit, and you can do a balance transfer from one credit card that has a high interest rate to this new credit card that doesn't have any interest rate, and for the first 18 months, and you can pay that down with no interest. So don't be afraid to look at other credit cards when you're in credit card debt, but you have to be smart about it. You cannot put yourself right back into the debt that you're already in. You want to make sure that if that's something that you do it right, you do it smart, and you can find yourself getting out that debt. Because what credit cards companies and banks, what they want you to do is they want you to do that. They want you to do the balance transfer, and they want you to not pay it off. And probably about 80% of the time, you're not going to, because you're going to find yourself with all this extra money because you're not paying any interest, and you're not really gonna pay down that debt. And then those 18 months or 12 months, however long you have with 0% interest rate, is going to be up. And now you're gonna have to do it all over again. And so now you start off with 1 credit card, now you have 2. Before you know, you got 8 credit cards with a total debt of $50,000. So you got to think smart about that. So that is going to be some ways that you can pay down your credit card debt. And then you have to understand, once you pay it down, don't put yourself back in that situation that you were just in. So what some people do is they immediately pay that credit card off. They take that personal loan out, that debt consolidation loan, they pay their credit card off, and what do? They go ahead and, sun's bright, they go ahead and pay that credit card debt off, and they go ahead and close the credit cards out. Don't do that. Last video we talked about credit. Leave that credit card open. Cut it up if you want to. Leave it open. As long as you're not paying an annual fee, leave it open, because all that's going to do is help your credit score continue to go up. Now, go ahead and cut the credit card up once you use it, and just know that you have that credit that you can use at a later date if need be. Now, looking at not getting back in there, try not to use the credit card so heavily. I mean, if you have a credit card, obviously we get credit cards for, you know, rewards, you know, cash back, travel benefits. That's what a lot of people use your credit cards for. So yes, you can put everything on your credit card. Like, I have a credit card where I put everything on it, and what did I do at the end of the month? At the end of the month, I go ahead and pay it off. Again, so I don't have to worry about any interest, and it's taken care of. And then what's happened? I'm getting myself cash back. I know one of my clients last year alone, she earned over $3,000 of cash back from using her credit card. One little known secret about cash back on credit cards, it's not taxed. That's free money. So she got an additional $3,000 that she wasn't taxed on. So hopefully the government's not watching and they don't change that in the future, but that's another great thing about these credit cards. So don't put yourself back into that financial bind that you was in. Once you pay it off, learn your lesson, And like I said, use it, you know, for something that you use your debit card for. You get gas, you get groceries, use your credit card, pay it off at the end of the month. Or if you're like me and you feel like you are financially sound enough to be able to use your credit card for everything and know that you can pay it off at the end of the month, why not do it? So that's probably the best way to go about that there. So last video we talked about credit. Today we talked about how to pay off credit card debt. I hope I was able to answer some of your guys' question, or maybe shine some light on an issue that you may have, that you realize you don't have, or that you have and you've been looking for answers for. Again, we're open for discussion. I got some positive feedback on the last video. Hoping for the same thing with this video. Next video, I want to talk about saving. How to grow your savings account. Whether it's just general savings, emergency fund savings, saving for car parts, saving for your kids, whatever. I want to talk about how to do that. And that's a very lengthy subject that can get talking into budgeting. It's just a lot. But I really want to kind of talk about it and how to have a savings goal and then reach that goal. But hope you guys enjoyed the video. You know what I always say, make sure you tell a friend to tell a friend. Make sure you give the video a thumbs up. If you haven't subscribed to the channel, make sure you do so. We got these videos coming. We got car videos coming. Actually hoping to go to a car show this Saturday, so hopefully I can have some footage from that. But without further ado, you stay up, I stay up. We catch you on the flip side. We out.